I'm just coming from Bombay, but she's so forceful that I straight came home. I was not planning to come home. Go somewhere and then come home, but she's got me home.
No. Thank you. Thank you so much. Well, it has been 8 years since the goods and services tax, the GST, took effect, unifying 17 taxes and 13 cesses. Tax collections have doubled in the last 5 years from just over 11 lakh crore rupees in FY21. The total mop-up now stands at more than 22 lakh crore rupees for FY25. The average monthly collection has also seen a steady growth from less than 1 lakh crore rupees in FY21 to more than 1.8 lakh crore rupees in FY25. The overall tax base has nearly tripled. In 2017, there were 65 lakh establishments and individuals registered as taxpayers. As of 2025, we have more than 1.5 crore registered taxpayers. But the call for reforms continue. There is a need to expand the tax base further and simplify the 5-slab tax structure. There are calls to widen the ambit of the GST to include petroleum products, alcohol, among other items. So where do things stand as GST completes 8 years? To discuss the road ahead, we're now joined by former Revenue Secretary Tarun Bajaj and Najib Shah, the former chairman of the CBIC. Gentlemen, appreciate you joining us here on this special edition of the GST Centimeter. Appreciate your time. Mr. Bajaj, let me start by asking you, as we take stock of 8 years of the implementation of the goods and services tax, and I pointed out many numbers there that tell us about the many changes that have taken place. In your view, what would you qualify as the single biggest success and also the single biggest miss of the GST so far?
So thank you for having me, first of all. I think you have mentioned a number of figures which are the achievements of GST over a period of 8 years. But I would say, and Mr. Najib Shah was perhaps right there in the beginning of the GST or when it was being drafted. And when I was there, there were a lot of hiccups still in the implementation process. And I recall my first interview with you where you were teasing me to ask me whether we will cross 1 lakh crores in the next month or not. So I think we have crossed that. So there is now acceptance to GST. The states at that stage and also the industry and everybody was telling us whether GST was the right thing to do, whether you've been able to do it rightly or not. So that faith has been restored. And now everybody, including the states and the industry, feels, and the surveys which have happened in this particular year have also given that feeling that people are now are satisfied as far as the first phase of GST is concerned. So I would say that this fact that there is an acceptance of GST, I'll not go into technicalities. You've given the numbers. The technology also, I would say, has improved quite a bit. There were a lot of problems and issues right in the beginning, but now the technology has stabilized. It is helping both the department as well as the people in terms of ease of compliance or ease of filing returns, and the department in terms of doing AI analytics and trying to catch hold of people who are trying to game the system. So I would say one thing, if you ask me, the fact that it has been accepted, nobody now questions GST. In fact, the call today is to bring the petroleum products and other items into GST, which I'm sure you'll cover in your course of your interview.
Yes, absolutely. That is the call, that when do we bring what is now being excluded from the GST under the GST tax net, essentially petroleum products and, of course, alcohol. Those are the big ones. But, Mr. Shah, thanks very much for joining us. And as Mr. Bajaj pointed out, you were right there. And I remember that session in Parliament late at night as we ushered in the goods and services tax. But, Mr. Shah, you know, as we look ahead, and Mr. Bajaj was pointing out how I teased him about the 1 lakh crore rupee revenue run rate. We've done the highest number of 2.37 lakh in April. And of course, the number that's come in for this month, the June GST collections coming in at 1.85 lakh crores. So the government's expectation or hope that we continue to hit that 2 lakh crore rupee revenue run. The big ask at this point is that the 5-rate structure needs to change. There needs to be simplification. Do you believe that that has to be the single biggest priority ahead of the government and the GST Council today?
Yes, I would think that is going to be a major priority. And I also believe that is going to be the biggest challenge. Simply because while everybody agrees that some sort of collapsing of rates is essential and necessary, it is going to be very difficult. However, what are we going to do? We are going to merge 5 and 12, or would you like to merge 12 and 18? What this would mean in either case is that some commodities rates will go up, some commodities rates will come down. Please remember the rates, like you're fully aware, was a combination of equity and concerns for revenue. Now, ideally, a tax administrator would be extremely happy with a single rate, but that's not practical. 3 rates also, as multiple GOMs have been struggling with it, has not been something which anybody has come out with a practical solution which is politically acceptable to everybody. So I think that will be the greatest challenge, and that's an opportunity going forward. I really believe as much as collapsing of the rates is required, we need to constantly keep looking at administrative issues, the blockage of input tax credit, what one keeps hearing about, the challenges in registration, the need for expanding audit, and cutting down issue of notices, which make headlines, but which don't translate into actual revenue, but which cause a lot of concern for industry. So compliance issues should be further simplified, and that's in the hands of the administration. We don't require the GST Council for that. Further, I think a GST tribunal is something which is urgently needed, which has been going on and on discussions. Everybody agrees that a tribunal is necessary and essential. That, I think, is something which needs to be done. Petroleum products getting in is going to be very challenging. Neither the center nor the states are really going to be happy with bringing in petroleum products, because that means a lot of revenue for them. So I think there are opportunities, there are challenges, which all of which can be surmounted with a greater deal of interactions between the center and the states.
You know, you're absolutely right in pointing that out. There are opportunities, but plenty of challenges. Mr. Bajaj, if my memory serves me right, it was while you were Revenue Secretary under your tenure, sir, that there was an interim report of the GOM on rate rationalization that was submitted. That was perhaps the only report that was formally ever submitted on the matter of rate rationalization, Mr. Bajaj, and that had, I think, recommended doing away with that 12% slab. As you look at where things currently stand, I mean, what should we realistically now expect? One is what you hope for, but what do you believe is going to be viable politically, you know, to take forward as far as rate rationalization is concerned?
So, Shereen, maybe as you get older, your memory also fades. So I can't remember whether an interim report had come or not, but I remember that the GOM was definitely formed during that time. I would completely agree with Mr. Najib Shah, and that's the advantage when you get people who have practiced revenue rather than speaking from the outside, that while this is what we should be doing, at least bringing 4 to 3, 5, 12, 18, basically these three, not to talk about the 28, which we can talk later, bringing these down to 2. Now, the challenges, I'm sure the states are struggling with it. One of the challenges that most of the states would be saying is they want revenue neutrality. So, which is not difficult for the officers to work out a revenue neutrality. But the challenge happens is that whether you want to have the rates as 5 and 18, so the gap between the two rates would be too huge, and there'll be a lot of pressure on the government and the political executive to bring items to 5. But even if you bring items to 5, whether you will give ITC, because most of the items which in 5 don't get ITC. ITC is blocked over there. If ITC is blocked over there, then the cascading of taxes happens. And or the other option is whether you would like to have a rate, say 8 and 16 with revenue neutrality being there. So these are the things that are very, very challenging. And then also what happens is that once you start working on it, the nitty-gritties come into being. Today, the apparel, the textiles have inverted duty. There are many others who have inverted duty. Now, if you take them from 12 to 5, the inverted duty will become even worse than what it is today. So this is something that is going to cause a problem. So I would say that it would be a very tough negotiation. It will need all the might and all the negotiating skills of the center, especially the officers, to first convince as to how it is to be done. I remember when people used to come to me and say, I would tell them that right now I'm trying to streamline the GST. This is not the time to do that. But nevertheless, I'm happy that if we can do that, I'll give you the complete list. Tell me what should go into the 5 category and what should go into the 18 category. And nobody was ready to take that call. So these are very, very tough decisions. And once it comes out, people who will move into the lower tax bracket will be very happy. But people who will move into the higher tax bracket are the ones who will create a lot of noise. And that noise will be heard and spoken about. And then it depends on the government of the day and the political executive to handle that pressure. So I think all these matters, and above all, the states are looking at whether they will get the revenues or not. It is finally that GST has started giving revenues, and they feel that we should not do anything to compromise on the revenue stream that is coming to them. Shereen, the last thing I'll say, and then I'll stop there. Having done GST councils, and I think Mr. Shah has also done GST councils, when all these states and UTs sit there, and even if there are 2 states who have a very strong point of view, you really need to convince them rather than bulldoze them. That's the way GST Council has been working. So it needs time, it needs convincing, it needs the associations, the FICCIs and CIIs of the world to get together and say, okay, we'll agree to this. So it's a huge task. It's easier said than done. So I would also agree with Mr. Shah when he finally says it is extremely challenging. But having said that, I think it needs to be done. It needs to be brought down to 3. And as our per capita income goes up from 3 to 5 to 8 or 10, maybe need to bring it to
I get the complexities and the challenges, Mr. Bajaj. Let me ask you this. What would your 3-rate structure be? In an ideal world, what would your 3-rate structure be? And I'll ask the same question to Mr. Shah as well.
So, Shereen, it's very difficult to answer it hypothetically because I would like to know what exact revenues come. But right now, I know that approximately about 70 to 75% of revenues come on the 18%, and about 6, 7, and 8, 9, or 9, 10% in the other two categories. So I would say that only technically, if you ask me, I would say the gap between 5 and 18 is huge. And it will cause classification issues, classification problems. So I would be happy to have 8 and 16. But as soon as you make 5 to 8, then all your essential commodities, the things that are consumed by the poorest people, go from 5 to 8, and it will create a political battle outside. So that is again another challenge. But if you ask me, that should be the way, 18, 16 or thereabouts. and maybe go up to the third slab is 28, which is already there.
Mr. Shah, what would your ideal structure be, sir?
I couldn't hear most of what Mr. Bajaj was saying, so if I'm repeating him, forgive me. I think 5% should continue because that's a rate which has a lot of commodities which are the Aam Aadmi's commodities, and that is the concern always. I think 12 and 18 should merge towards 15 or 16. I think what this presupposes is that a lot of the exemptions which are screening the entire rate structure needs to be pruned going forward. Ideally, we should not be having any exemptions in a value-added tax structure, because every exemption breaks the tax credit movement and hurts GST. So, and 28, we need to look at the commodities at 28. Most of the commodities which you thought were luxuries in 2017 may not be luxuries in 2025.
Yeah.
I think there's some movement required from there. And if we can bring those commodities down from 28 towards this new slab structure of 16, then look at 28 and hike it up towards 30. Ideally, this will be a T structure. And we're also now presupposing that CES, which has had a long life, will not continue beyond March 26. The states have been doing well, revenue has been doing well. So I think we need to phase out CES, which again makes the tax structure a little skewed.
So important there, both of you agreeing that there is a need to review what lies in the 28% bracket. Many items there don't fall under either the luxury or the sin goods category. So a review of the 28 slab per se. And then, of course, look at whether 18 becomes 15% or 16%. Najib Shah saying keep 5% as is, and Tarun Bajaj saying perhaps 5 may need to go up to 8. But, of course, that's a politically sensitive call. You brought out compensation for states. We will address that issue. But after this very short break, the government report card suggesting that states have earned 46.36 lakh crore rupees between FY19 and FY24 versus 37.5 lakh crore rupees that they could have earned if the GST had not been in play. We will take a short break and return with compensation and more. Come back to us. You're watching the GST Centimeter as we take stock of the GST at 8.